Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day. It's Wednesday, March 11th. Wow, we got another crazy day ahead here, so we'll see that in a moment. But first, we'll look at the economic calendar. We got the CPI report, or Consumer Price Index. This is a inflation-based index on the consumer level. It's important, but it's not outweighed by the PCE. The PCE actually has higher weight, as that's the Fed's favorite gauge for inflation. However, let's look at these month-over-month number of data here. So, in January, we had a 0.1% increase in CPI. Forecast accounted for zero, and it went up 0.1%. However, its year over year actually dropped from 2.5% year over year down to 2.3%. Now, when you strip out the food and energy, this is kind of what we look at because those are variables that are that have no control factors. So we look at put more weight on the core when we look at these inflation data. And you see 0.2% increase in January, also 0.2% on the forecast for February, and it came in expectation of 0.2%. However, its year over year did increase a little bit. It went from 2.3 to 2.4%. Now, with this whole coronavirus thing going on here, we will probably expect to see inflation drop more as the economy dramatically slows down. We haven't really seen this much of a disruption in the economy and these big, huge swings in the markets since the credit crisis around 08, 09 time frame. So we'll probably see a drop in inflation as things slow down quite a bit. And again, I wouldn't be surprised to see that. So let's jump ahead here to see how the headline news is. Stocks are way down. They had a good day yesterday, had a rally, but it looks like more of a head fake. Dow, I think, would close up like 1,100 points. However, now it's down about 1,000 points. So they could be losing all those gains they gained yesterday. And of course, Monday it was a pretty dramatic day too. Dow was down down 2,000. Now, something on the agenda today, we're hearing a lot of the government and central banks around the world basically saying they're going to try to create whatever stimulus package they can help their economies. Central banks are cutting rates. So we have a lot of things kind of going on in that. Of course, we got coronavirus, the news just showing that it's continuously spreading a bit more. So not much, I can't say really a whole lot on the coronavirus. I don't think there's really a whole lot more other than, as we know, it's just beginning here more in the U.S. And we're finding out more and more as there's a lot of uncertainty as to how many people are actually uh, carry the virus right now. So we don't even know that at this time either. So there's a lot of uncertainty. So let's see how this is playing on the bond market. Oops, sorry about that. As you can see here, we've had a pretty dramatic day here. From Monday, we're way up about 80 basis points to losing all that, closing down about 5 basis points. Yesterday, we closed down. It was actually there's a little bit more dramatic than it was, but not by much. We had a bond rollover yesterday, so it only translated about 9 basis points, and we closed down about 91 basis points. So that translates to about 80. What would that be? 82. 82 basis points we closed down. So that's 160 basis points, which means 1.6 points in pricing. And now today, we were actually up about 20 basis points opening, and then we've been dramatically dropping again. Even since I did this, we even touched down here down below. Right now. This is showing about 47 basis points, and it was even. I saw sharp spikes even down to 66, and it's kind of going back and forth. Right now, it's pretty close to where this level is now. Now, I drew this line here. This is kind of our trend line. And if you kind of imagine another line here, we kind of got way out of line here. We got kind of dramatically dropped up. And right now, we're still within this upward trend line here, if you could see that. So not to worry too much, but we just got a little too much too fast, if you want to look at that way. And right now we're just kind of testing our bottom of the trend line. I do think we will go upwards. We have a chance later today with that because we have a 10-year Treasury auction going on. That will be around 10 o'clock Pacific Standard Time. And if that goes well, we could see a bit of a spike in the bond market. Investors might put the money in. So right now, it's looking like investors are just taking their money out of the market entirely. So stocks are tanking, bond market's tanking. So there's not a whole lot more places where to put it. I mean, obviously we got gold and stuff like that, but for the most part, it's just looking like they're just pulling money from the markets in general. So we're not really seeing a whole lot. But again, we're at about this trend line here. We're still at the bottom of this. We're not really going above it. We're testing it, but doesn't mean we're going to break and stay below it. So we got this upward trend line, which is kind of helping us out. And I would say I think we'll see some improvements at some point, but it's just a lot of craziness and uncertainty, and the investors have no idea where they want to go. So they're looking for any bright hope they can find wherever they can find it. So let's see how yields are doing. Yields are doing a little bit better. They're kind of closing up almost about 0.7. They're at 0.7877 range. It kind of dropped a little bit even when I did this. We'll see where this goes later today. Again, after the 10-year Treasury. But again, a lot of craziness going on out there right now. So we probably had a slight improvement this morning, but with that sudden drop, we had we had at least one price change and maybe even two so far this morning due to that. Or they may even just try to play it, hold pricing until after the 10-year Treasury, see what things go on. So just be cautious out there. Have some patience. If you're refinancing and not getting the rate you want, you might want to just kind of hold off a little bit. If you're in purchasing, you might want to hold it a little bit if you see if these can shake out here. Hopefully, the next couple days or week if you have it, depending on what time you have. But right now, it's just unfortunately the markets are where they are, and it's pretty insane. Have no control, and of course, they got such a big influx of volume coming in that they actually lenders were actually raising prices to slow things down. On top of that, so we have two factors. So we have the markets that have been kind of crazy at least this week, and then bond market not being conducive to lenders getting so much volume coming in that the only thing they can do is raise rates to try to reduce that workload because they're overwhelmed right now. All right, so again, mortgage rates are a little bit higher again today. But again, we may see some light at the end of this tunnel here very shortly. All right, so that's pretty much the wrap for the day. But if you guys are in California looking to buy or refinance, please reach out. We'd love to help you guys out. You can the best way to reach me is either direct message or email. Email is the quickest of the two for turnaround times, as I get those messages quicker than I do through the social media sites that you may find this video. All right, folks, have a wonderful day. I appreciate you guys watching this, and we'll look forward to see you guys in tomorrow's video. Bye-bye.